everyone. Welcome to another episode of In Conversation by Advisor Coach. Today in conversation, our guest is Mr. Umesh Sharma, CIO Debt with the Wealth Company Mutual Fund. Welcome, Umesh, once again to In Conversation.
Thank you very much. Thanks for having me.
Our pleasure. So I'm sure from the last podcast we did to now, you must have been extremely busy. A lot of funds have been launched. A lot of schemes have been launched.
Yes, sir. So basically, I think if you look at the history of various new mutual funds coming into the market,
Mm-hmm.
I think in terms of product launches, I think we are the fastest.
Mm-hmm.
So
Correct.
yeah, it's been quite a busy time, and we are glad to be busy that way.
No, no, it's very good because see, the moment you launch your first NAV, then you also start building a track record.
Absolutely,
And many people follow this track record, for further investments, etc.
absolutely.
Yeah, fantastic, wonderful. So, which all schemes have you launched already till now?
So we have a flexi cap fund, we
Hmm.
have an ethical fund, we have an arbitrage fund, we have a
Hmm.
liquid fund, and we have a multi-asset fund. And now
Multi-asset fund.
we also have a gold fund FOF as well.
Excellent, excellent. So, well, for our viewers, today's podcast is covering their new fund offer, which is the Wealth Company Balanced Advantage Fund. This NFO was launched on 27th of January and is closing on 10th of February 2026. So, well, straight getting into the Balanced Advantage Fund. Uh, of course, it is very important to have this fund because this is like a omni fund. Any market time, the investor must have this particular fund in their portfolio. But could you just take our viewers, in terms of what your balanced advantage fund is all about, etc. What will the fund investment strategy be all about? What will be the equity debt allocation? If you could just take our views through all.
Right. So basically, you might be looking at the picture in the background, basically that of a flying kite.
Hmm.
So I'm sure many people will be, they will have this experience of flying kites as a kid or maybe as an adult during Makar
It's a
Sankranti. They will be
it's a
doing
very
it.
good creative. It's a very good
सबको को पता है कि
creative.
जब भी एक साइड पतंग झुकने लगती है, उसका बैलेंस खराब हो जाता है, तो फिर उसको उड़ा नहीं सकते हैं।
Uh,
तो अपने को उसको बैलेंस करना पड़ता है। दैट इज पॉइंट नंबर वन। पॉइंट नंबर टू, वी लुक एट द थ्रेड। बेसिकली इट्स
hmm.
द वे द मार्केट गोज अप ओवर अ पीरियड ऑफ टाइम, बट इन द शॉर्ट रन basically there could be volatility. So balance advantage fund tries to exactly do that, take you through volatility while adjusting your asset allocation. And our fund is doing exactly that. It aims to reduce volatility through systematic rebalancing. One,
Hmm.
it also aims to eliminate emotional decisions that many people take during market downturn. सो कभी कभी मार्केट अचानक से गिरने लगता है।
Hmm.
अब लोगों के मन में फियर आ जाता है, अभी क्या करें क्या नहीं करें, बुक कर लेते हैं लॉस, बाहर निकल जाते हैं। इसी तरह जब
Hmm.
मार्केट चलने लगते हैं, तब लोगों को लगता है अभी मैं रह गया। अभी आपने देखा होगा प्रीशियस मेटल्स में एग्जैक्टली द काइंड ऑफ बिहेवियर दैट वी हैव सीन।
Yeah.
So it aims to eliminate any sort of inconsistencies or incorrect decisions that we make, because we being an emotional, being. Third is it is designed for risk averse investors who are aiming for steady long term growth. And in terms of basically structure, we rely on our own internal model,
Hmm.
which basically looks at some factors like rolling 5-year averages of price to book and price to equity.
Hmm.
It also looks at certain momentum indicators. And on the basis of that, the allocation between equity and fixed income is changed.
Sure, sure.
Uh, and we have had these returns from our internal model back tested going over 1 year, 3 year, 5 year, and 10 year. And the kind of returns that we are getting on the basis of that are quite encouraging.
Sure.
And on top of that, we'll obviously have our own layer of the human touch, basically the fund management team's experience. And primarily, the allocations are guided by the model, but they are shaped also by what the fund management thinks and believes is the state of the market.
Sure, sure, sure. So on the equity side and debt side, अगर आप थोड़ा बता पाए that equity, will it be more like a market agnostic, sector agnostic, and
Yeah,
both at flexi style and on the fixed income side. What,
correct.
do you have any bands in which you will play the
Absolutely.
duration, the credit profile, etc. as well?
That's a great question. So basically, I will cover this in two parts.
Hmm.
One is obviously the first question that anyone asks is that, balance advantage fund, there are many in the market. You are also coming out with a balance advantage fund, तो
Hmm.
आपके फंड में अलग क्या है?
Hmm.
और दूसरा ये कि आप जो आपने पूछा कि आप इसको एग्जैक्टली जो है कि आपके जो प्रोसेसेस हैं फिक्स्ड इनकम के
Hmm.
इक्विटी के हाउ डू दे वर्क?
Yeah, correct. Yeah, particularly the edge model and आपका EPOHC वाला जो मॉडल है.
करेक्ट. सो पहले कि हम अलग कैसे हैं, सो बेसिकली अगर आप देखेंगे जो भी बैलेंस एडवांटेज फंड है मार्केट में, दे आर प्रीडोमिनेंटली लार्ज कैप ओरिएंटेड,
Hmm.
राइट? वी इंटेंड टू बी मार्केट कैप एग्नोस्टिक. दिस इज
Hmm.
पॉइंट नंबर वन. सेकेंड इज अगर आप बाकी सारे बैलेंस ऑपरेट फंड देखेंगे तो दे ऑपरेट इन अ नैरो नेट इक्विटी एक्सपोजर रेंज. तो
Hmm.
टिपिकली आप जो 65% एलोकेशन इक्विटीज में रखते हैं वो प्योर इक्विटी हमेशा नहीं होता है. जब आप मार्केट्स में नेगेटिव होते हैं तो आपका इक्विटी एक्सपोजर कम हो जाता है. तो टैक्स एडवांटेज को मेंटेन करने के लिए आप 65% तक आर्बिट्राज के थ्रू पहुंचते हैं.
Yes.
करेक्ट. तो जब नेट इक्विटी एक्सपोजर की बात कर रहे हैं तो हम इक्विटी एक्सपोजर नेट ऑफ आर्बिट्राज की बात कर रहे हैं. तो अगर
Hmm.
बाकी सारे बैलेंस एडवांटेज फंड का अगर हम देखें तो उनका एक नैरो नेट इक्विटी एक्सपोजर रेंज होता है.
Hmm.
और हमारे जो मॉडल का नेट इक्विटी एक्सपोजर रेंज है वो मार्केट के रेंज से ज्यादा है.
Sure.
That is point number two. Three is our, as I told you, proprietary framework for rebalancing. Fourth is, of course, our framework with which offer equity and fixed income edge,
Hmm.
change and epoch, which I will talk about. And last but not the least, the kind of experienced hands that are there behind the mutual fund and behind the people who are guiding it.
Sure.
That is also equally important. So, very very strong corporate governance in terms of the kind of trustees and board members that we have, the kind of vintage, heritage, and experience that they bring to the table, and the experienced executive team. Again, the fund may be new, but the people managing the products are not new, and
Yes, absolutely.
decadal
Yes.
experience within the
Hmm.
market.
Very true.
So I think all these factors make the sort of offering that we are coming with quite different from the rest of the market.
Hmm.
In terms of the investment philosophy for equities, basically, so we signified via two acronyms. One is change, and the other is edge.
Hmm.
We believe that change is the only constant, to be a little
Hmm.
cliche,
Hmm.
but each and every acronym here stands for something. For example, C stands for capable management. Uh, uh, Basically, you have to look at what kind of strategic leadership, what kind of long-term vision, and kind of proven resilience across market cycles corporate management has shown, which is very, very important. What kind of risk foresight do you have, etc. H stands for historical performance. So,
Hmm.
what kind of strong, financial as well as operational performance the company has shown in the past? What
Hmm.
sort of capital allocation decisions have they taken and have they been efficient? A stands for attractive valuation. So basically,
Hmm.
whether we are entering at a time when the company valuations are looking attractive, or it is looking expensive. Then N stands for navigating market cycles. So in the past, how the company has adapted operationally, how it has adapted financially, what sort of proactive steps they have taken, when they have identified certain macro shifts, etc. It is very
Hmm.
important.
Hmm.
G stands for governance and transparency. Goes without saying, high governance standard. What sort of minority interest. How they have been looked after. Quality of information that they put out in the public domain. How they interact with the investors. How they answer their queries, etc. All that becomes important. And last but not the least, E stands for earnings growth and execution excellence. So at the end of the day, any stock that you invest into should be scalable business and profitable growth. That is very, very
Sure.
important. All of this is layered with the overall, framework which we called EDGE. EDGE here, E stands for exchange and market specific indicators. D stands for domestic indicators. G stands for global indicators, and E stands for exit and rebalancing strategy. So
Sure.
basically, you look at what kind of price change, what kind of delivery volumes are happening, what sort
Hmm.
of volatility the stock is exhibiting. Within the macro factors, what sort of economic growth we are having, what are the drivers, what is the central bank doing, How are the rates moving? How is it impacting the stock? In terms of global factors, how are the currency movements? How are global bond yields behaving? What are central banks doing? What are their policies? How are they impacting the FI activity, etc.? And in terms of, again, very, very important that when to buy a stock, what is your
Mm,
exit and rebalancing strategy? Are you finding better opportunities in the market? Is
mm,
it that the stock that you invested into with a particular thesis, now it is drifting away from that? Are there signs of business disruption? Has the competitive intensity increased? Technical factors, how are they looking? So all these factors go into the exit and rebalancing strategy.
sure.
So that is the basic summary of how we approach any investment on the equity side. And again, very importantly, we are bottom-up stock pickers. So rather than when to buy, our major focus is on what to buy.
What to buy? Sure.
Uh, Again, in terms of fixed income, it's slightly different in the sense that it's a mix of top-down and bottom-up. So within a fixed income perspective, what does that actually mean? So when you decide on where the interest rates are headed, that is basically the answer to when to buy. And
Mm,
when you are actually deliberating on the credit quality of a particular paper,
mm,
then you are basically answering the question what to buy. So
mm.
within a portfolio, until unless you have an understanding or an expectation of where the interest rates are and where they are likely to be headed, it is difficult to construct that portfolio. And until unless you do the initial due diligence and get comfort, you can't protect the downside, and that is where your credit analysis comes in.
Sure,
Epoch
sure.
is a blend of both these: economic environment, pricing and relative value, optimal positioning, credit quality analysis, and ultimately to ring fence it all, what kind of hedging and risk control you are bringing to the table. So that is
Mm.
what Epoch is all about.
Sure, sure. So fixed income on this fixed income sides in this particular fund, Balanced Advantage Fund,
Yes.
like I asked in terms of what kind of duration management आप देख रहे हैं, credit
Yes.
quality आप देख रहे हैं, which your
Correct.
EPOHC model and framework के through आप, you will provide
Correct.
the insight into this.
सो बेसिकली हमारा किसी भी हाइब्रिड फंड में कोई भी फिक्स्ड इनकम पोर्शन होता है, तो हमारा ये मानना है कि बेसिकली उसकी एक खास एक उसका एक रोल होता है.
Hmm.
So basically, one is that it should act as a stable anchor, which is
Hmm.
why it is there in the first place,
Correct.
right? And basically, that portfolio should be so liquid, so as to, without any sort of hiccups, uh, carry out the rebalancing that happens in the fund from time to time. Third is it should not be a source of volatility itself,
Hmm.
right? So for all these answers to be answered affirmatively, the portfolio has to be very, very liquid. It has to be of very high credit quality, and it should not be having very high duration. What we have also seen is that over a long period of time, if you look at the short end of the curve, I'm talking about say 2 to 4 year kind of maturity. On a risk-adjusted basis, they outperform the other parts of the curve. So our stated strategy for the fixed income portion of hybrid schemes typically is this, that we will maintain it with a 2 to 4 year kind of maturity bucket, and it will be predominantly very high credit quality.
Sure, sure. Now, yes, because I think because that's very important because when you look at the, analysis where the fixed income should not, eat up the returns created from the equity. And
Absolutely.
hence, the fixed income has to give a very stable,
Absolutely. तो जो अल्फा का
income
काम है
stream.
वो अल्फा को करने देते हैं.
Exactly, exactly.
हमें नहीं करना है.
Uh,
और मोस्ट इम्पोर्टेंटली, यदि आप हमारे एसआईडीज देखेंगे, स्कीम
hmm,
इंफॉर्मेशन डॉक्यूमेंट, तो आप जो मैं जो ये बोल रहा हूँ आपको हमारे डॉक्यूमेंट्स में भी मिलेगा.
correct. Because attribution analysis should clearly, throw the output that equity is the one creating the alpha,
एब्सोल्युटली.
and that is giving the stability to the entire portfolio.
एब्सोल्युटली. एब्सोल्युटली.
एक बात बताइए since we are having this conversation today just after the budget, correct?
राइट.
So the hot topic.
जी.
Abhi, you heard about the FNO,
जी.
correct? The STT increase, etc. So obviously, arbitrage funds get impacted majorly because of that,
यस.
correct?
या.
And we often see in the balanced advantage funds that the unhedged position, is taken care by in the direct equities stocks, but the hedged is taken care through the arbitrage funds.
करेक्ट. करेक्ट. करेक्ट.
Now, very briefly, if you could just share your thoughts. Do you believe this will go through a change because this has immediately increased the cost by about 20 to 25 basis point on the arbitrage funds? So do you
Uh,
think now the naked positions probably will become more large cap oriented, and in order to have that 65% equity and arbitrage, proportion could come down a bit?
No, I don't think so, because
Okay.
ultimately the kind of overall taxation benefit that you're getting,
Hmm.
which is like 12.5% over 1 year,
Hmm.
that should override any sort of additional transaction charges that get built in because of arbitrage.
Sure. Sure. Okay. No, that's an important point because I think
You-
in the
Yes,
overall long-term
because
game. Hmm.
yeah, to extend this question further, even for arbitrage category as a whole, also if you see,
Hmm. Hmm.
so post that there's going to be an impact, right? But then again, people come in there primarily because they have that kind of investment horizon. Number one, which I'm assuming obviously the advisors will be advising it, because in the short run it can be
Of
volatile.
course. Yes.
But for the tax advantage also,
Hmm.
right?
Hmm.
And that doesn't go away. That remains the same, and adjusted for tax. Even then they remain competitive, is what I believe.
Sure, sure, sure. And one more extension of the same question is that we did see borrowing program to
Yes.
be, quite substantial for this
Yes.
financial year,
Yes.
the next
Yes.
financial year, and the net borrowing program, is also reasonably a good number, correct? And we did see the yields spiking today, correct?
Yes.
So how do you
Yes.
believe the fixed income market will kind of settle down, and how much will an RBI be able to play a role through its various, uh, uh, calibrated inputs through the OMOs and etc.?
Yes. So basically, the budget is probably not the only driving force behind the kind of rise that we have seen in yields. See, budget only came yesterday.
Hmm,
But if you look at the fixed income yields, they've been rising for quite some time now. In fact, if you look at the increase in yields across the curve post the last
hmm,
policy in which interest rates were actually cut, so typically you should see yield curve going lower, but across the curve you have seen yields move higher.
moved higher.
And there are many factors behind this. Budget being probably adding to that fire a bit is what I would say.
Hmm,
So it at the short end, if we first focus, then basically it's primarily the sort of volatility in liquidity that we have witnessed has impacted the sentiment, because whatever that RBI has tried to add through durable liquidity injections, या तो OMO purchase हो या वो CRR cut हो या वो forex swap हो, on the other hand, it is getting eaten away by these FX interventions which the central bank is doing,
hmm,
and the increase in currency in circulation.
hmm, hmm,
The
hmm,
buildup of government balances adds up another source of volatility. So the problem is like a treadmill effect where something comes from one side and goes out the other.
hmm,
So that has created volatility. Second is that if you look at the systemic CD ratio, it is north of 82% now.
hmm,
And the CD supply from banks have been quite relentless.
hmm,
So
hmm,
the demand supply balance is a little out of whack because of this relentless supply. Third is you are in the last quarter of the financial year, which any which
hmm.
ways, the supply pressure is higher seasonally.
Correct.
So all these factors, and then you look at the way the currency volatility is, and that also impacts the dynamics in the money market space. So
Absolutely.
owing to this, you have seen a phenomenal rise. In fact, if you look at the 3 month and 12-month kind of very, very liquid CD rates today, they are
Hmm.
offering yields in excess of 200 basis points over policy,
Right.
which is like phenomenal spread. So on a relative basis, on a valuation basis, we absolutely love these levels. But we know that for at least in the near term, that volatility can continue. So we are very much liking this part of the curve, despite the yields continuously rising since some time. That is first. Second, if you look at the mid and long end of the curve, there are again, apart from the factors that I mentioned, there are certain other factors in the sense that global growth has held up better than expected. Point number one. Point number two, if you look at the commodity prices, so earlier it was a precious metals rally, but now, notwithstanding the correction that we have seen recently, you have
Hmm.
seen the kind of rise that has been witnessed by certain industrial metals, Even crude has flared up on account of the Iran
Yes.
tensions. So that is two. Third is, of course, the volatility on the currency amidst the relentless FI outflows. Fourth is demand supply mismatch that is there, where a lot of duration supply has been thrown to the market in the post-COVID era.
Mm,
And ultimately, market is not able to absorb both from the center as well as states this increased
mm.
duration supply.
Sure.
A lot of it has been balanced by what RBI has been doing on the OMO side. But had they not been there, then the increase would have been probably much higher.
Much higher. Mhm.
And the budget has only added to it because while in the terms of net borrowing, the number is not that much high, but on the gross borrowing side, it is higher than what the market was expecting. So, market was expecting some 16 trillion kind of numbers, give or take a few, and the actual number has come out at 17.2. So, having said that, if you look at the underlying assumptions behind the budget numbers, it feels quite credible and, to be sure, a bit on the conservative side. The
Mm,
nominal GDP assumption number one at 10%, it's quite reasonable because even if
mm.
you expect 6.5% of real GDP growth and you expect 4.5% kind of inflation, you're actually going higher than 10%.
Sure.
So there is some element there. The kind of tax buoyancy that has been built in is again on the conservative side, number two. Number three, sort of disinvestment, I'm sorry, the sort of dividend receipts from
Mm.
RBI and PSCs, etc. I think there is some scope there as well. And disinvestment probably a bit higher than what we have seen in the past. But then again, if you look at it in terms of overall capex spend, quite reasonable. Overall revenue expenditure, again quite reasonable. Even if they reduce it a bit, it should be still be fine given the trends that we have seen in the past. So you put all these factors together, and you also notice that what sort of fiscal deficits getting funded by the dated borrowings. So that number is also higher than what we have seen in the recent past. So
Mm,
there is a upside surprise. For example, let's say in the small savings collections,
mm.
right? So that number can actually come down. So prima facie, we feel that as we move along into the financial year, you will see probably a downward revision to these numbers, is
Sure.
what we feel.
Yeah,
For the
I.
time being, yeah, time being it's painful.
Mm.
And going forward, I guess it is going to be more manageable.
Yeah, I completely agree with you because Umesh, I think market ने somewhere has completely discounted the news that the overall central government's debt to GDP
Right.
from 56 has come down to 55.
Yes.
You know, and which is a great achievement. And they have given a good, front-loading direction that by 2030 it will come down further
Yes.
from there.
So if you look at it both in terms of fiscal deficit as well as debt
As
to
well as, yeah,
GDP,
4.3%,
oh, yeah,
and more importantly, achieving
absolutely.
4.4 fiscal deficit target, being achieved for this financial year as well. Market ने somehow, I think, वो इन न्यूज को बिल्कुल डिलीट कर दिया.
So there are certain other factors, as I said, budget is not the only factor.
Yeah, yeah, very true, absolutely. So, coming back to the Balance Advantage Fund, today, what message would you like to give, Umesh, to all the viewers, the mutual
Yes.
fund distributors, the advisors, investors, listening to this podcast about the Balance Advantage Fund as a category and the Wealth Company Balance Advantage Fund NFO in particular to be part of the asset allocation?
तो देखिए बड़ा इम्पोर्टेंट हो जाता है क्योंकि अल्टीमेटली you want a product which can give you downside protection at the end of the day, and this is one such product. The setting or the context in which these funds gain prominence is also important. So we have seen in the recent past that cycles are getting shorter and volatility is rising.
Mm, mm, mm.
Uh, and if you look at geopolitical uncertainty, that has also risen. If you look at fiscal uncertainty, that has also risen. So during that time, any product which give you downside protection, is a fund you should be looking at. And we actually looked at, for example, because balance advantage category has been existing for quite some time.
Mm,
So if you
mm,
actually look at the data and look at the drawdowns, So we were looking at certain numbers. For example, the drawdown that happened between Jan to March 18, the drawdown that happened between Jan to March of 20 during the COVID times, drawdown that happened between September to Feb 25. So where the Nifty 50 had fallen significantly. So in certain cases, it had fallen by 38%, certain cases fallen by more than 50%. And during that, those drawdowns, the 8 or 10 in number, the data point that we looked at, the balance advantage category had fallen by less than
Mm,
30 to 50% compared to the Nifty.
that's true.
So it actually does what it says.
Mm,
And over a period of time, if you're able to give the downside protection on a risk-adjusted basis, the returns are pretty decent.
mm.
And that is what we are trying to do in this product as well.
Sure, sure, sure. Wonderful. So, well, for our viewers, this is Mr. Umesh Sharma, CIO Debt with the Wealth Company Mutual Fund, talking about their new fund offer, the Wealth Company Balance Advantage Fund, which was launched on 27th of January and closing on 10th of February 2026. उमेश बहुत बहुत शुक्रिया आपका आई आई रियली लाइक कि आप जिस तरह से डिटेल में घुस के बाजार को समझाते हैं that's very
Yes, sir.
very important because that's what a lot of learnings come out through that for me individually as well as for our viewers listening to you. So thank you very much for taking out time and taking us through this new fund offer of yours.
Thank you. Thank you very much, Surin. Thank you.
Thank you very much. Thank you very much. And for our viewers, I would like to remind you, please press that subscribe button and please subscribe to the YouTube channel of Advisor Coach for such wonderful updates being received in the future as well. Thank you, Vish. Thank you very much.
Thanks. Thank you.
Thank you.